Okay, so welcome into today's video. The video you're about to watch is a bit of a snapshot taken from a DeFi masterclass that we did to open up and kind of peel back behind the curtain as to what happens in our fast track program. This particular masterclass was dedicated to capitalizing on altcoin season, which we may or may not be running into over the next few months. But the idea is that we wanted to peel back the curtain, showcase and share what's happening behind the scenes. And we do this maybe, once every month or so to really give people in the wider UIG a bit of an insight into what's happening in the fast track program. So check it out. It is a longer session, but hopefully you get some value out of it. And I'll jump over to it right now. Okay. Hello, everybody. Welcome into our DeFi masterclass. So, big welcome. Let's get those cameras on if you're available and willing. Daniel, great to see you. Audie, Artem's here as well. We got Mark in the house. We got Josh, Tony, Leonardo, Coach B. Great to see everyone rolling in. I'm just going to keep admitting everyone for another 30 seconds. We've got a few people rolling in, and I'm just going to post in the chat again just to tell everyone that we're live so that we can get as many people in here as possible. If you guys could mute your microphones as you're rolling in as well, that would be amazing. So what we're going to be looking at today is how to capitalize on altcoin season. So hopefully that is exciting for you all in the room. I am going to be sharing a bit of an overview of what we'll take a look at, and we're going to get right into it. But sometimes you have to know when is the time to seize the opportunity. And I think I don't want to speak too soon, but I think that opportunity is in front of us for the next few months as we look at what's happening in the market, as we look at the setup that we have from a macro perspective. We can see some of the things presenting themselves on the charts from a technical perspective as well. And ultimately, I want everyone here to make as much money as possible. So that's what we want to reverse engineer here for the next 30 to 40 minutes. So we've got pretty much 50 people in the room here, which is amazing. As we're going through the session, if something is not making sense, do feel free to pop up your hand. We'll try to keep maybe the last 5 minutes or so for questions specifically. So if anyone does want to just wait until the end, that's perfectly fine as well. But if something is not making sense or you want to pop up your hand as we move through the session, then please feel free to do that. Use the raise your hand feature and I'll see it pop up and we can basically make sure that we remove any confusion. So I'm going to share my screen. We're going to get kicked off to start working through this masterclass. Just need to make sure that I'm sharing the correct screen. So is everyone seeing how to capitalize on alt season on the screen? Hopefully you are. Amazing. So, I was thinking through this I've been thinking through it for a couple of years at this point for alt season and how we want to actually position ourselves for success. But really just breaking it down into a few key steps that I think we all want to be following. So first of all, I want to talk about what is alt season, what does it mean, and how can we identify it? Second of all, how do we identify opportunities in alt season for our spot portfolios and also for DeFi? Amplifying gains with DeFi yield and leverage tools. We're going to touch on that. I know some people in this room are probably familiar with options there, but we can discuss that in a bit more detail. And risk management and exit strategies. This is one of the most important things when it comes to ultimately being a profitable investor, making sure that we don't round trip, making sure that we take profits, making sure that when we use leverage, we're utilizing correct and healthy risk management strategies. And so I want to discuss all of that as well. So first and foremost, What is altcoin season? Well, technically speaking, it is a period in the market where we see the vast amount of altcoins outperforming Bitcoin on a percentage basis. This usually happens after a strong Bitcoin rally. And if I jump over to the charts here just for a moment, what we've seen obviously over the past few months is a very strong Bitcoin rally. Guys, if we could just mute our microphones, if everyone could just take a moment to make sure that your microphone is muted. I'm going to check the list here, but we're just picking up a lot of background noise. So
thank you, man. You're welcome, bro.
Let me just make sure of that. Just give me 1 sec. I'm going to mute a few people manually. Okay, so what we've seen over the past few months, obviously, is a pretty healthy and strong rally for Bitcoin. Even since these beginning of April lows, we're technically up 60% for the price action of Bitcoin. Okay, we've also seen Bitcoin dominance increasing pretty substantially over the course of the past couple of years. And we're starting to see a bit of a breakdown with Bitcoin dominance here over the past few weeks. Now, if we zoom out here on the chart, a lot of you in Fast Track are used to me talking about this, but what we saw back during the 2021 cycle was a very strong breakdown in Bitcoin dominance from January 2021 through May of 2021. And so we're starting to see that breakdown. And what's different here with this breakdown right now compared to what happened in November, because we did see a very similar breakdown here in November, is November put in a higher low before going on to reclaim the 200-day to keep moving higher. This time, we've had a breakdown, a retest of the 200-day where we got rejected twice, and we've continued lower, and we're now starting to put in a lower low compared to this low that we initially broke down to at 60.5%. So this is the formula I'm kind of looking at to give me that first true sense of altcoin season, and Bitcoin dominance breaking sharper to the downside means that alts are going to really start to rally if this dominance percentage keeps moving lower. Ethereum beginning to outperform and over 4,500 at this moment right now, it is leading the charge for this altcoin season. And I'll bring us back to this path to altcoin season on this graphic here, because historically speaking, and I know some of you have been around for a cycle or two, some of you have not been, you're a little bit earlier, but this rotation into Ethereum and seeing Ethereum begin to outperform Bitcoin is this kind of phase two on the path to altcoin season. We can see that's been playing out here over the past couple of months with ETH versus Bitcoin. We had a bottom on this chart for ETH versus Bitcoin down at this 0.11 area before getting a bounce, reclaiming the 200-day. And you can see right now, at this moment, we are threatening a breakout of this long-term downtrend for ETH versus BTC that goes all the way back to August of 2022. If ETH can break out and close above this resistance level, that gives us permission for Ethereum to continue moving higher against Bitcoin, leading that altcoin season charge. And then from there, what we typically see is that rotation then into the larger caps from Ethereum. We should see the likes of, let's say, Solana, maybe XRP, and a few other larger cap tokens begin to substantially outperform Bitcoin and even start to outperform Ethereum on a percentage basis. From there, the rotation typically happens into the medium to small cap tokens, where you have a fully blown altcoin season where almost every single asset is significantly outperforming Bitcoin on a percentage basis, but that is not long lived. What we have here is we need to understand that it's not going to last for a year. It's going to last for a couple of months, if not a few weeks, for that true altcoin season rally. Now, again, if I go back to Bitcoin dominance and look at this chart, we can see that Bitcoin dominance started breaking down in January of 21, but we had a little bit of kind of sideways action here throughout February and March until it had that next really strong leg down. And this really strong leg down, let's say from the middle of March to this low in the middle of May, that was about 50 days. Okay. And so this is what I want to kind of emphasize here. I think there's an opportunity here for us as we move into the end of Q3 and Q4 to seize an opportunity that typically only comes around once every 4 years. Okay. Is this making sense, guys, so far? Please drop a thumbs up in the chat just to keep me keep giving me that kind of real-time feedback that this is making sense. And if there is questions, please do pop up those hands. But drop a few thumbs up in the chat if it's making sense so far. What does that mean for us as investors and liquidity providers? Well, what we want to do is identify altcoin opportunities in DeFi and obviously for our spot holdings as well. So finding the highest probability winners before they peak, because what we're seeing is certain alts beginning to have some pretty good weeks. If I jump over to crypto bubbles very, very quickly, looking at this weekly, pretty much everything here is in the green, but you're also seeing some pretty phenomenal returns from the likes of Lido up 70%, Arrow up 64%, Link is up 44% on the week, Athena's up 42%, Pendle's up almost 50%. And so this is just starting to ramp up with what we see with a true altcoin season. Again, I don't want to state that we're truly in the midst of the alt season just yet, but we are seeing the early signs of it. And like I said, I want us all to capitalize on the opportunity. We've looked at this flow of Bitcoin to Ethereum, to large caps, to mid caps, to micro caps. Hopefully you're beginning to understand how this is working. And I think we're maybe 20 to 30% through phase 2 at this moment in time, maybe a little bit longer. And it might be a few more weeks before we see, some of the larger caps start to really make big moves. But how do we identify opportunities from a DeFi perspective? Well, there's a few different ways that I like to do this. If I'm looking at token inflows, wallet accumulations, TVL growth, DeFi Llama is a fantastic resource to track growth of TVL in DeFi over time. If we look at total value locked in DeFi, we're starting to get right back up to these highs that we were close to or that we were at in 2021 in terms of getting up to $170 billion in TVL. We're at 155 or 153 billion as of right now. What I'm thinking is we're going to be moving up here to retest these highs and hopefully break beyond them in the next couple of months. But on a deeper level, if I'm looking at individual protocols, individual token opportunities, if I come into the chains area, this is how I want to start identifying outperformers. I'm just going to use SUI as a quick example of what I think looks very healthy from a TVL growth perspective. This chart moving up and to the right here in terms of TVL, it bodes very well for the SUI ecosystem, in my opinion. Early 2024, we had, roughly speaking, 200 million of TVL. We've gone 10x with the TVL on SUI in the past year and a half. We're over $2 billion of TVL on the network. And this really nice, steady growth up and to the right is what I want to see from a protocol, but also from a token if it has that underlying token when I'm looking to provide liquidity. This gets me excited about the SUI ecosystem and the underlying protocols. And, if I'm to jump into any of these individual protocols, like Navi protocol, for example, I'm seeing a very similar trend with TVL increasing over time on one of the leading lending and borrowing protocols on the SUI network. And so that is what represents very solid growth for me. I was looking at Kai Finance last week, again, a newer protocol, but moving up and to the right in terms of TVL. This is really healthy. That's what I want to see. Crystal is another tool that we've used a lot in the UIG and with a lot of clients in the fast track as well. If I jump over to Crystal, What I really like about Crystal is it gives me a really quick snapshot on identifying volumes and TVLs and TVL to volume relationships. If I jump into the hot pools area, I can start to filter by different networks, and then I can start to filter by different platforms from there. So let's say I only wanted to look at opportunities on the base network first and foremost, and I was trying to assess opportunities on base with regards to Uniswap v3 um, and Aerodrome. I can filter those opportunities here, and I can begin to get a very quick snapshot of the volume coming through that pool, the TVL coming through the pool, and the 24-hour volume to TVL ratio. Okay, this is when you have particularly a lot of volume coming through different alts when we begin to get into this phase of the market where you have large caps, i.e., phase three, and all season with the smaller caps into phase four. You're going to see crazy TVL to volume ratios during that period with certain assets. We can see WETH USDC, this particular one on Aerodrome, has about an 1100% volume to TVL ratio. Again, when I'm looking at this, I'm using this as a reference point to help me identify the opportunity and compare and contrast pools on Uniswap versus Aerodrome, but also specific underlying assets. So another way you could frame this or think about this is if I come over to DeFi Tuna, for example. I like the way on DeFi Tuna you can categorize or filter by farm opportunities by coming up to the top of the screen here, looking at this yield to TVL ratio, sorting that from top to bottom. What you're typically going to find is that there's going to be a couple of meme coins at the top of the list here with very high yield to TVL ratio percentages. But when looking at this, it's giving me a signal of how well this pool is performing based on the volume coming through it at this moment in time. And so a higher yield to TVL ratio means essentially you're going to get more bang for your buck from providing liquidity, but you're probably going to be taking on a bit more risk with some of these meme coins. We've got a really nice Sol USDC pool and a Tuna USDC here, giving 0.34%, which is excellent. But just using tools like this to give me the quick snapshot of where the opportunities are lying is going to be very useful for picking out new opportunities. What else am I looking at? DEX data directly on Uniswap. We've looked at DeFi Tuna just a moment ago. Again, I really like to look in here at volume over time to see how consistent that volume has been. I'm going to choose a Uniswap pool more specifically to open up the data related to everything happening on Uniswap's interface here. Oh, we're getting an error. Maybe we can try a different pool opportunity. This is a Zora WETH pool, so it's not WETH USDC, but it seems like Uniswap is giving some errors right now. So maybe that's specific to the base network. We can try something on Arbitrum very, very quickly and open up the... Okay, I keep getting errors with Uniswap, so there's obviously something going on there, but I think you're understanding the point I'm making here. Looking at the volumes, the ratio between 24-hour volume and TVL, and how that's helping me to make decisions around where is the liquidity flowing and where is the volume. Narratives and sector plays, again, when it comes to identifying opportunities, narratives have a big role to play. There's a few different places I like to look at narrative tracking. If I come over to DeFi Llama, they've got a pretty good narrative tracker now built into DeFi Llama. By default, it gives you the 30-day outlook. So we're looking at the best performing narratives over the past 30 days. If we scroll down here, we can see that Ethereum has been the best performing, and that's not a surprise given that I feel that we're in this phase 2 of the path to altcoin season. We're seeing 50% increase for the price of Ethereum in the past 30 days. Oracle's outperforming and giving 48% return. You can also see the number of tokens or coins in that particular basket over on the right-hand side. And so if I click into this, you're probably going to see the likes of Chainlink, Nest Protocol. I'm not familiar with a few of these others, but they're categorized based on the specific narrative and how it's performing relative to the rest of the market. You've got GameFi tokens up 21%, liquid staking governance tokens up 46%, real world assets up 18%. And so we can zoom out a little bit further as well. If we want to, we can look at year to date. We can see that overall, memes have been outperforming year to date. Analytics and Ethereum is doing pretty well. DeFi is up 25%. Real world assets up 13%. And so, again, when I look at this over a 7-day period, depending on how you want to be providing liquidity, you might want to be catching a trend for a particular narrative when it comes to providing liquidity to, let's say, a WETH link pool. If Chainlink has been performing exceptionally well over the past week, you're going to have the ability to capture a whole lot of fees there. And so I'm using these different data points and on-chain data essentially to help make decisions and identify opportunities to capitalize on during this altcoin period. So hopefully this is making sense for everyone again. If there's questions, please do pop up your hand. Make sure to let me know if something is not making sense. But the next phase of this, or taking this to a whole new level, is your ability to amplify gains using leverage tools. Now, I do have to caveat this and say that if you are more of a beginner, you probably don't want to be thinking about using leverage too soon, especially if you've never played with leverage, either when trading on centralized exchanges or with perpetual dexes. This definitely requires a level of skill that you want to get comfortable with when managing risk. We've spoken about a number of these protocols, and I know a lot of people in the Fast Track group are very familiar with some of the protocols on this list. But what we're doing here is basically supercharging our returns by using strategic leverage and managing our risk accordingly. What does that mean? What does that look like? Well, the protocols that I've listed in bold here, like Revert, like Contango, Gearbox, Kai Finance, we looked at on last Wednesday's roundtable session, and DeFi Tuna, where we were just looking. These protocols and tools allow us to add a certain amount of leverage into different liquidity pools. I'm going to look at a very quick example on DeFi Tuna and just illustrate the point here as to how we can be optimizing yield using leverage. But if we were to put, let's say, $1,000 of USDC into a Sol USDC pool, we can add something like 1.5x leverage, borrow 100% in Solana if we're bullish on that asset moving higher, set up a really nice range here, maybe something in the region of, let's say, 170 to 220. That's a pretty moderate range. We're looking at about 25 to 27% wide with that particular range. But using 1.5x leverage allows me to increase my capital exposure in the pool. So I'm putting up $1,000 of my own collateral, but by using 1.5x leverage, I'm essentially borrowing an additional $500, which gets injected into the pool to bring my total exposure up to $1,500. And what it's quoting me here with this pretty moderate range and that capital deployed is that I'd be generating about 0.35% per day on my owned collateral or capital. Okay? So again, you're using this to boost your yield potential, but it is not without its risks. Remember here, if I'm borrowing USDC in this particular option, I have a liquidation price. I'm levered up in my position. Therefore, I have to account for the fact that on the low end here, if Solana was to drop all the way to $70 per token, I'm going to get liquidated on my position. Now, $70 is a long way away from the spot price, 188 right now, but Solana is a volatile asset. And you have to remember, if you're doing this and thinking about doing this with Ethereum, Solana, Sui, etc., you have to factor in the volatility. If I jump back to TradingView very quickly, those of you who might be a little bit newer, you can check the volatility of any asset if we jump into the daily chart here by bringing up a super simple historical volatility indicator. we can see the volatility on SUI right now is 80.46. If we look at Solana, we're at 62.81. If we look at Bitcoin, we're at 20. And so typically speaking, as you go down into, large caps, mid caps, small caps, you're going to have historical volatility increasing for smaller assets and more volatile assets like meme coins and more speculative tokens. So with Solana's volatility at 63, it's more than 3x the volatility of Bitcoin at this moment in time with a 10-day look back period. I have to account for that and think about that when providing liquidity to an asset like Solana. I want to give myself a really nice buffer regarding that liquidation price. I never really want to get close to it, but this is how you can manage that risk yourself. And you might think about scaling up to 1.7x leverage. That brings your liquidation price up to $86. That might still be sufficient enough for you managing your risk to say, okay, I'm happy to go with slightly more leverage because my liquidation price is still below $90 and I've increased my yield potential on a 24-hour weekly and monthly basis. So hopefully this is making sense. I know this is second nature to a lot of people who've been here for a while, and particularly those in fast track, but the ability to add leverage and increase your cash flow is something that you want to build up to and is hopefully a bit of an unlock for some of the newer members here as well. CJ, I see your hand up. How's it going?
Yeah, pretty good. Thank you. Just a question. You'd probably put a stop limit in there just right around, just above your bottom range or right below it?
Yeah, great question. So again, for those of you who are not familiar here, you can actually set a limit order, and that's what CJ is referring to close out your position in case it was to go out of range or begin approaching that liquidation price. And so if I'm setting a limit order, CJ, I probably don't want it to be too close to the bottom end of my range. I've been out of range a couple times on this pool in the past few weeks, and I've just let it sit there for a few days to come back up into range. And obviously, if I was setting, a limit order at 168, right below my range, it probably would have closed out my position and I would not have started earning fees again as we come back into range. So if I'm ever setting limit orders here, I prefer to leave a sizable buffer below the end of my range in the event that I actually do go out, maybe for 24, 48, 3 days, and I do tick back up. I don't want to miss out on going and earning fees again and locking in permanent loss if I don't have to. And again, I think that's up to you to be strategic about not wanting to close out the position too early if we go out slightly at the bottom, giving yourself some grace and some time to come back up into range. So hopefully that gives you some context and a little bit more context for everyone else on the call here. Great question. So I'm not going to show all of these individual examples because we'd probably spend the next 2 hours looking at all of them. But these protocols like Revert for Arbitrum pools on Ethereum, Contango for looping up exposure to underlying money markets on Aave, Morpho, etc. Gearbox allows you to do some pretty similar things to Contango. Kai Finances for the SUI ecosystem specifically. All of these protocols allow us to add strategic leverage to increase our cash flow potential when providing liquidity. And if you want to make the most of this altcoin season, you could consider using a little bit of that, but always run a test first. Do not go and put 100% of your capital into a levered up pool when you don't understand the underlying mechanics and you haven't at least run a test for a couple of weeks. Another thing you could consider is getting some fixed yield. We've been looking at opportunities over on Pendle with the Fast Track Group over the past few weeks and looping up exposure to fixed APY using Contango for PT tokens on Pendle. If I jump in here, just to make everyone aware, what Pendle does is it essentially gives you the ability to extract the fixed yield from specific assets, i.e. stable coins, and get that fixed rate even if you are holding it for a long time. And then you take that a step further by using protocols like Contango to loop up your exposure to that fixed APY, it's a really nice source of yield. And you can be generating 2 to 3% per month on stable coins from using protocols like Contango to lever up exposure to fixed PT tokens over on Pendle. So again, we don't have time to go into all the intricacies there, but just another option to consider. And then finally, obviously stacking multiple yield streams. One of the things we've been really kind of doubling down on in the past couple of months is this treasury flywheel that most people, well, at least most people in Fast Track are using as the kind of foundational pillar of their portfolio. You've got your treasury assets. It's going to be a little bit different for everyone, but for most people, it's usually some combination of Bitcoin, Ethereum, Solana, SUI, XRP, etc. You're holding those assets for the long term, but those assets serve as a phenomenal source of collateral. You can tap into those assets in order to borrow against them as collateral, freeing up additional capital for you to begin generating cash flow with. And that's what we're representing here on this flywheel. Of course, we need to do this in a strategic manner to minimize risk, and we never want to be borrowing too much. We typically recommend keeping those LTVs 40% maximum, but that frees up capital, and at the same time, you get to continue accruing value with your treasury assets. You're maintaining exposure and ownership of Bitcoin, Ethereum, and whatever those assets are in your treasury for price appreciation here in altcoin season, but you're also generating cash flow from the borrowed capital, putting them into strategic yield-bearing opportunities, and then you're compounding those gains and continuing to benefit from this flywheel. Again, this step number 2 and 3 is going to look different for everyone, depending on the assets you want to be providing liquidity to, then depending on how much capital you are willing to take out for lifestyle expenses versus injecting and compounding back into liquidity pools, or even compounding back into spot holdings to get more price appreciation. It's going to look a little bit different for everyone, the mechanics of each of these underlying steps 1, 2, and 3. But for the most part, the majority of people in our Fast Track group are executing on this in some capacity and benefiting from this flywheel. Hopefully this is all making sense again, guys. I know this is a lot of information, but I just wanted to try touch on all the things that we can be looking at in order to benefit from this altcoin season, which I think we are very, very close to. And the final thing really just to hit home with is risk management and exit strategies. Okay, we spoke a little bit about risk management a moment ago, especially when looking at levered opportunities on DeFi Tuna, Revert, Contango, etc. It's your job as the liquidity provider to manage the risk of the liquidation point. Okay, as soon as you start to use leverage, you have to understand your liquidation price. You have to manage that accordingly. That is your responsibility to do and manage. It also comes into play when you're doing this lend borrow with freeing up your treasury or using your treasury as collateral to borrow against. You have liquidation prices to manage for those treasury assets if they're on lending and borrowing protocols like Aave, like Moonwell, like Camino, whatever it is, wherever you're doing it. You have to manage the risk, manage the liquidation prices, and monitor the assets accordingly. Okay? Exit strategies is very important. Personally, I've been in the position where I could have and should have taken more profits on certain assets in the past. And I think a lot of people in this group have probably been in that scenario. We want to avoid round tripping at all costs. Ultimately, we're here to profit. We're here to make money. And in my opinion, having some sort of plan in order to do that is very, very helpful. One of the resources we have in the community, and I can paste this link into the chat here as well, is this ladder out spreadsheet. Again, this is for taking profit on your spot holdings. I'm going to share this in the chat as well. But essentially, this gives us the ability to map out a profit-taking schedule and plan for the different assets we're holding in our treasury. And it's up to you to reverse engineer the targets where you want to start taking profits in order to actually create those sell orders to lock it in as prices move up during altcoin season. Okay? This is a template. You can probably take a lot of these numbers with a pinch of salt because these are numbers that I plugged in here about 6 to 9 months ago. I still think some of them are relevant, but of course, it's me providing this to you is not about me saying these assets are going to these prices, but rather giving you a framework and a template where you can change the numbers and plug in the numbers for yourself so that you have profit-taking targets. That's the thing I want you to take away from this, is that you need to have profit-taking levels that you're comfortable with, that you stick to, and you may not stick to it 100%, but having some sort of plan for profit-taking is better than just waiting for a pie-in-the-sky number that you just are crossing your fingers and hoping Bitcoin gets to $400,000 in the next 6 months, which may or may not happen, but you probably want a strategic plan to take profits along the way, and that spreadsheet is designed to help you do that. Okay? Other mechanisms you can think about, again, depending on where you're doing trading, depending on where you are selling your assets, using things like trailing stop losses that allow you to follow the price up and then take profit if we pull back, let's say 3, 4, 5%. Locking in those gains is going to prevent you from doing a full round trip. Thinking about allocating heavier to liquid majors. Again, during the peak of altcoin season, you're probably not going to run into issues with liquidity for certain trading pairs because there's typically huge amounts of liquidity across most trading pairs and dexes. But having that liquidity to get out of those small caps is important. And so if you're trying to use some obscure DEX, there may not be as much liquidity as on more established DEXs. You have to remember, if you're trying to get a large amount of capital out of a small cap token, you need to have enough liquidity on the DEX or SEX in order for that to be facilitated. Okay, that's something you want to think about ahead of time and not be scrambling to try find an exit route for a very small cap token on some sort of DEX that doesn't have enough liquidity. Okay, hedging with perps or stable liquidity pools. Again, this will be for, in my opinion, once we begin to actually take some of those profits, being able to use yield on yield, i.e. taking profits in stable coins, using those profits to go back into stablecoin LPs, where of course you're not getting as much yield as if you were providing liquidity into, crypto to crypto pairs at the height of altcoin season, but minimizing risk and making sure that you're keeping your profits is going to allow you to continue to earn yield on yield with those profits. And finally, rotating back into Bitcoin Ether stables. There's a very good argument to be made that maybe instead of taking profits into stables, you want to actually go ahead and take some of those profits into Bitcoin. If ultimately your goal is to build a treasury of more Bitcoin, maybe you want to consider just taking profits out of smaller alts. Maybe that's SUI, maybe that's Tau, maybe that's Cardano, maybe that's whatever asset, plug it in. Maybe you're not married to that in the long run as much as you are to Bitcoin. And if your goal is to accumulate more Bitcoin, no harm rotating some of those profits back into Bitcoin in order to actually create some long-term wealth. I'm seeing Julie asking about laddering out in the LP. That's another very valid option. And if we summarize that very, very quickly, if you're providing liquidity into a WETH USDC pool, or if you have even a spot holding bag of ETH where you want to take profit, you could consider setting a range for yourself. Let's say you expect ETH to peak at maybe somewhere around $7,000. You set a range for yourself above the current spot price, and you provide liquidity to that pair to take profit. You're going to get slowly converted all the way into USDC by the time you come out the top of your range and ETH blasts through $7,000. A really nice way to take profit on an asset and earn fees throughout the entire duration of it moving up through that range. So that's a very valid option, and I think something you could consider for taking profits as we move up in price. So that's most of what I wanted to cover, guys, in terms of this opportunity, I think, that's ahead of us to really capitalize on altcoin season. I know that was a lot of information, but I wanted to try just get everything out of my head that I was thinking about related to altcoin season and lay it out for everyone here. I know some of that content we've looked at historically with some clients in Fast Track, but Hopefully there was a few nuggets of value in there for everyone on the call. So yeah, let's do 5 minutes of questions. I wanted to run this session for 40 to 45 minutes. So if there's any questions on anything at all that we've looked at, please pop up your hand. If you have a question that you want to put in the chat, then please drop it into the chat as well. And we'll do that for the final 5 minutes here, just to make sure that everyone is feeling good about today's presentation. So I'm seeing Cast asking, at this market stage, isn't it better to leverage trade and spot? Don't you always get out of range? Yeah, I mean, depending on the assets where you're providing liquidity, sure, it's possible to be going out of range, but if you are able to select some correlated assets that are moving up in value, Cast, it can be pretty good to be earning some pretty solid fees while also getting price appreciation on both assets. So that's a good option if you're considering some alts. I mean, some of you who were here last year, Q1 of 2024 was a very aggressive run up in the market. I remember providing liquidity to pairs like Sol Render on Orca. That pool just was blasting to the upside, getting huge price appreciation. And getting really good fees at the same time. So if you're strategic about it, yeah, you can find some pretty good crypto to crypto opportunities in order to capitalize on. Todd is asking, is it better off using leverage on a wider range or no leverage on a tighter range in most cases? If I'm using leverage, Todd, I prefer to use a slightly wider range than normal, just because when you go out of range on a levered pool, you got to remember that you're also still paying the interest on the borrowed capital. And so I want my capital to be working for me and profitable as much of the time as possible. And so if I end up going out of range on a levered pool, I'm still paying interest every minute, every hour, every day on the borrowed capital while it's not earning fees. So to mitigate that, I prefer to go with a little bit of a wider range when providing leverage. So hopefully that gives you a bit of context. Is it wise to buy into ETH now, or are we too deep into that phase? I don't think we're too deep into the phase, Daniel. I still think there's more room for Ethereum to run. But the way that I think about it is, for the past 2 years, I've been DCAing into other alts that I think are going to outperform Ethereum on a percentage basis. And obviously it would have been better to be buying ETH down at 1,500 when we were down here just a couple of months ago. But I do think there's more upside for Ethereum. I just think there's higher upside on a percentage basis for other assets. So take from that what you want, but I don't have any ETH exposure in my portfolio. I do have some Aerodrome, which is kind of like my ETH proxy. And we can see that when ETH does run, Aero actually runs harder on a percentage basis to the upside and the downside. So you have to be able to manage both. Could the BTC dominance chart become invalid or more difficult to evaluate as institutions buy up Bitcoin, making it more difficult to rely on historical percentage dominance? Yeah, I think that's a fair point, John B. I do think what you're seeing in the past couple of weeks is the Ethereum ETFs actually getting huge amounts of volume compared to the Bitcoin ETF as well. And so perhaps as we see institutions starting to flow capital into Ethereum and speculated ETFs for the likes of Solana, XRP, SUI, et cetera, in future, maybe they will also act as vehicles for institutional money to flow into, and maybe it kind of balances it out with Bitcoin dominance in the medium term once we see more of that as well. How would you use a perp to hedge? What is a perp? So a perp is a trade, basically using a perpetual trading DEX like Jupiter or Hyperliquid, Ramon, where you can short an asset using leverage. We took a look at this the other day with the Fast Track group again. But if I come into perps here on Jupiter, it basically just means that if I want to set up a trade and I want to short an asset like Solana using 2x leverage, it means I only have to put up $1,000 of my own capital to have $2,000 of exposure to shorting Solana. It's a more capital efficient way to short or long an asset, but you have to remember it introduces liquidation risk. Just like using leverage on a pool, you're going to have a liquidation price for the asset if it moves against you in the wrong direction. So taking that into consideration would be very important when using leverage on perp trading. Is it better to use leverage on boring pairs versus altcoin ETH with no leverage? It's going to be safer, Aditya, in general, to use leverage on boring pairs compared to more highly speculative, volatile assets. And so, yes, I would be very careful. And personally, I prefer to only use leverage on, slightly more established liquidity pool assets. I know we should be using historical volatility to compare two LPs. How does the comparison change when we have leverage involved? So yeah, the way that I'm thinking about historical volatility, Aditya, is just to really give me a grasp on how volatile is the asset compared to Bitcoin. So we know Bitcoin is the lowest volatility asset in the crypto space, and I need to compare and contrast the risk I'm taking on when providing liquidity to a certain asset based on its volatility. Typically, higher volatility means higher risk. And so I want to assess that in order to get a benchmark for that asset, get a basis for that asset using Bitcoin as a benchmark for historical volatility. And so, yeah, I'm using that as a scale to give me a pulse check. What percentage do you recommend for a TSL order? Like 10% trailing stop loss? Yeah, I think somewhere between 4 to 8% is typically what I would look at. If you're okay, taking a 10% pullback, I think up to 10% is fine. I'm doing a bit of degen experiment in useless sol, 5% a day. Yep, no problem with that, Daniel, as long as you're not using too much of a large percentage of your overall portfolio. I think we've all got a bit of degen in us, so no problem with that as long as you're being careful. Would you recommend buying or holding Tau and subnets on DEXs or on Tau network directly? Do you plan on holding Tau beyond the peak of the bull run? I recommend holding Tau directly on Tau network itself and holding the subnets on the Tau network because you can stake them and get yield off of them. And that strategy has been working quite well for the past few months. Yes, I will also be holding Tau beyond the peak of the bull run. I don't remember the site, but you could borrow on your existing Orca pools. Do you perhaps remember the name? Yeah, so that was DeFi Tuna that we were looking at, Cast. So DeFi Tuna allows you to use your pool as leverage to borrow against and increase your exposure into that pool itself. Wow, great questions, guys. I tried to power through as many of those as possible, but fantastic questions, and hopefully you got some good answers there. Thank you all for joining on today's DeFi Masterclass. Maybe let me know if these are valuable. We can run them maybe more frequently, maybe once every few weeks or once per month. We can do a deeper masterclass just like this. Let me know in the chat if that would be valuable for you. The last thing I will mention is if anyone is looking to take their DeFi skill set to the next level, we obviously do have a fast track program. I know there's some fast track people in the group here today, and maybe you guys got some value here as well. But if you're looking to get a little bit more hand-holding with the fast track group and get on sessions just like this, we do 10 live calls in the fast track group every single week. And so you have the opportunity to ask questions, get feedback, interact with multiple coaches. Let us know if you're interested. You can always hit up Colin, hit up Rylan, hit up myself if you want to learn more about fast track or have a conversation. So we're here for that. We're here to support you guys in your DeFi journey. Continuing to upskill in crypto and DeFi, I think is something that's only going to stand to all of us over the next decade and beyond. And I'm super excited about the growth of this entire ecosystem in the next few years. So if you really want to take this seriously and build that skill set, reach out to us if you're interested in fast track. And yeah, you're seeing some good feedback from a few of the fast track crew in the chat here. But other than that, guys, we love doing this stuff. So if these master classes are helpful once per month, maybe for people to go a little bit deeper and talk about some of the topical narratives and themes, I think we are on the precipice of alt season. A lot of us have been waiting for it for a long time. But, there's opportunity here to capitalize on that over the next few months. So thank you everyone for joining. I really appreciated all the input, all the questions, and great to see so many of you on camera. As always, hit me up if there's any follow-up questions. And yeah, let's make the most of this market. So thank you so much, everyone, and we'll see you in the chat. Okay, so hopefully you got some value out of that deep dive into capitalizing on altcoin season. I know there was a lot of information in that session. Hopefully some of those questions and answers at the end were helpful as well. We've got a bunch of very intelligent people in the UIG community and in our fast track program. So if you are looking for more handholding, looking to take your DeFi skill set and just your crypto knowledge in general to the next level, check out the links in the description below this video for the UIG, for the fast track program, and you can start upskilling and generating cash flow, taking back control of your financial future. And we'd love to see you in there. Check it out now, and we'll catch you in the next one.